now we've got another index that we have to look at, and I welcome this one because it's a confidence index, and the markets and the economy is run by individuals, and so if we're confident, then presumably we can look forward to brighter futures. We saw the consumer confidence index yesterday. Today we've got the CEO confidence index. It's the fourth quarter number, and it's been put together by Merchant Tech Capital in the Joburg studios. Rick Irving, Director at Merchant Tech Capital. So what were the findings, Rick?
Well, in quarter four of 2012, we unfortunately saw a drop in confidence in all components of the index, the largest of which coming from the economic conditions component. We saw a 14.7% decrease in confidence in this component, and followed closely by CEOs' confidence regarding their growth expectations within their respective industries. We saw 11% drop in confidence in this component.
So basically what we're seeing here is exactly what we saw from the man and the woman in the street when we spoke to Dr. Kees Bruggemans, consultant economist to FNB yesterday. People are not very confident about the South African economy. They're not confident about growth, but on the other hand, they're fairly sanguine about their individual circumstances, and presumably then the CEOs of the companies are confident about their company's prospects.
The confidence within the individual companies was one of the higher components. But yes, as you say, within the actual market conditions internationally and locally, steep decreases in confidence there. I think internationally, what we keep speaking about, all quarters this year, the continued uncertainty and slow recovery in Europe. Now the uncertainty regarding the possible fiscal cliff and the implications that this could happen, that this could have, should it happen. And a kind of growth slowdown in Asia. But I think really where it's coming in and factoring into the man on the street, as you say, is locally. We've had a huge decrease in confidence as expressed by the CEOs as a result of the labour unrest, the continuing strike action. CEOs have mentioned a number of times that we have a sheer lack of leadership and inadequate governance, particularly in the public sector. This political and policy uncertainty really tarnishing investor confidence as well as CEO confidence within the index.
What about politics? That must have come up.
Yeah, definitely. Time and time again, we do have a section in the index where the CEOs can give their comments, and a lot of these comments were to do with government and where we are politically, and this governance that we are lacking.
Yeah, and within the politics itself, I don't want to harp on this too much, because we're going to be doing politics to death between now and Mangaung on CNBC Africa. But things that have been there for quite a while that are still a scourge of the South African economy and the South African political system. Things like high corruption levels, which you point out here. You also talk about, you've spoken about labour unrest, but things like poor infrastructure, that sort of thing. These long-term things that need to be fixed, are they still in the back of CEOs' minds?
Definitely, and particularly with regarding the issue around infrastructure, this definitely factored through to our industrial sector of the index. They recorded a 12% drop in confidence, and what came through there was that since they are largely construction companies making up this components of the index, was the chronic government infrastructure underspending, which has been highlighted as the main issue by the CEOs there. Government plans to spend 14 trillion rand over the next 15 years on CFCF or GFCF or gross fixed capital formation, yet with current levels of infrastructure spending, they're just going to fall short of these targets.
But let's break down the sectors now. You talked about one just now, but basic materials sector recorded a 16.2% drop. So it's not just a homogenous group, this CEO group that you've surveyed. There'll be differing performances from differing sectors. Basic materials down 16.2%, which is bad. What are the ones that actually have been the most confident?
Yes, basic materials, the largest dive, 16%, as you mentioned there. Not surprising given the labour unrest and whatnot that's been going on, soft commodity prices and the like. With regards to sectors that have shown the strongest confidence, strangely enough, we have the financial services sector, which is the only sector to have actually recorded an increase in confidence, although a marginal one, only 4.5%. But I was sitting here in quarter three and we were discussing how they were the only sector to record a dip in confidence. Now in quarter four, they're the only sector to show an increase. So, historically they are a conservative sector, so these increases and decreases are usually, small amounts. But a trend that we have noticed amongst the index is that the financial services sector seems to be a quarter ahead of everybody else. So I wouldn't be surprised if within the other sectors we then show increases in confidence in Q1 of 2013.
In your brief experience with the CEO Confidence Index, has it been a leading indicator?
Definitely, it's been a leading indicator. We can see this by how it tracks the respective JSE sector indices. They are largely tracked by our index, so encouraging to see.
Yeah, and finally, I mean, bringing the human element into it is as simple as this. If a CEO is confident, both in his company, his ability to run the company, with what's going on in the economy, then it could be fair to say that his policy, his corporate strategy will be more expansive, and therefore might go out and make an acquisition or spend some of the money on the balance sheet, pay a special dividend. Is that a theory that's worth noting?
Yes, I suppose it would depend on the CEO, but the confidence as a fundamental itself, it is a personal factor, like you say. It does have human elements to it, so I would think that the higher level of confidence could definitely relate to a higher level of spending within that company.